Welcome everybody. This is George Veter, president of Veter Financial. This is our monthly video blog, and we're grateful that you are tuning in and giving your attention to some things we feel might help you at this moment. First of all, it's the 1st of April today, and we're just ending the first quarter, which was marked by a lot of volatility. We all know the issues if we've been watching the news or been talking to anybody in our neighborhood. But there's a lot of concern and uncertainty out there that have unsettled everybody, including people on Wall Street. So I want to address just a few things about that and just assure you that everything's going to be okay, just like every time we have a dislocation or disruption in the market flow due to something that scares us. We get through it and we move higher. This time, history will repeat. I can give you that assurance. Now, as you know, tariffs are exacted on companies that export their products to the United States. And we've had tariffs. It's not a new thing. It's in the news now and hasn't been for a long time. But we've had tariffs since 1789 in this country. In fact, I was looking at the history of tariffs just to think about things to talk to you about. And just before the Civil War, 90% of the revenue to the United States came from tariffs. That slowly diversified out in revenue stream to, depending on the country, between 20 and 50% tariffs were our revenue when World War II started. And then slowly that has tapered down to be even less of our revenue. But it's not a new idea. And there's different types of tariffs. The most common kind is reciprocal, meaning that if somebody being a country, is exacting tariffs on us to buy our products, we're going to exact tariffs on them to buy their products. So it's reciprocal. It's just evening the playing field. And then there's other incentives and things, and I'm not going to get further into it than that because, I don't want to take political sides. But there's a reason for the tariffs, and I do think that they're going to be adjusted, and it's created a period of uncertainty because we don't know what tomorrow brings. We've had all kinds of adjustments already with the fluidity of these tariffs, but we know a lot of that's going to get settled tomorrow in the coming days when tariffs are instituted, and then the negotiations around those tariffs will be ongoing. And we'll get used to them, just like we get used to anything. I would say that this moment reminds me so much of 2020 when we had the pandemic hit the United States. Just if you can, in your mind's eye, go back to that time. January, we identify that part of the sick population of the United States as COVID-19. And then, in the news, it was every day, COVID this and COVID that. And in March, we had a lockdown where that was a deadline for businesses to close that weren't considered essential services. So we had restaurants that were shut down. We had certain transportation systems that were shut down. Everybody's life changed in different ways, but it was shocking. Different manufacturers were shut down if you weren't considered an essential service. And we manufactured a recession, right? Because we closed businesses down to deal with that virus. In April, the market had adjusted enough to the reality of the pandemic that the market started recovering. And if you had a moderate portfolio, like a third in bonds, 2/3 mixed in different stock categories, I think it's safe to say you made about 10% net of fees in 2020. It ended up being a very solid year, actually above average. So the only people that ended up in a bad situation were those that were scared into cash by listening to too much negative news and thinking and focusing and obsessing about worst case scenarios. Now, I think this is very similar. We come into 2025 with a great economy. Unemployment super low, inflation getting under control after being at highs in 2022. Corporate earnings excellent as reported in the fourth quarter, January through February, just getting ready to have another quarter. Everything is kind of on a roll. And then we start talking about tariffs that were promised with this new presidential administration. But when we get to the reality of them and then the different nuances and changes with the tariffs, it becomes our obsession, along with cost cutting and DOGE. And the threat to public servant jobs, even though we know that that deficit has to be dealt with. this is a great time to be our client because we've been preparing for moments like this. That's why we keep people diversified. That's why we never think that we can know what Wall Street's going to want next month. There's going to constantly be sector rotation. And when something goes out of favor, the interest from the investing community is going to refocus on other things that are cheaper. And that has happened. So we have large cap value that's doing comparatively extremely well versus growth. And then we have these foreign assets that I mentioned, and bonds are holding up wonderfully. In fact, the first quarter for government bonds has been a great quarter. So here's my prediction and what I want you to focus on. We're going to get through the shock of this dislocation in the market and this period of uncertainty. And then we'll focus back on what companies are worth based on the profits they make and their trajectory within the footprints they're building in their different marketplaces. That's what makes the stock market be the stock market. We actually have earnings start in 2 weeks for the first quarter, April to May. And it'll be more, I know there'll still be news about Washington and what's going on, but we'll have other things to talk about than tariffs and Doge every day. And I would predict that the market will normalize, stabilize, and start rewarding companies that should be rewarded based on hitting their targets and then projecting growth and having the courage to go get that growth. So again, I'm just super grateful to have you as clients. Many of your neighbors might have been too focused on certain areas of the market that were popular for a few years, and they might be getting hurt unnecessarily so if they haven't had a properly architected plan. So I would invite you to any of your friends that are telling you about the huge losses or fear over huge losses, bring them to our monthly referral dinner and let us tell the story. Let us show what's really going on, not just in the media's eye, but in the actual factual world of investing and how we're planning for today and what we're seeing for tomorrow. Make sure, as always, that you focus on the important things in life, your relationship with the God that you worship, the relationships that are dear to you. Keep strengthening those and make sure you keep yourself healthy. And we will worry about your money and get you through these moments like all the other moments in the past. God bless you, and I look forward to chatting with you the 1st of May.